Sikasa Chairman of the CRC, Chandra Gelli, and our session chairman, C.S. Sahati ma'am, and my dear students. Very good morning to one and all. My hearty welcome to you all for the virtual knowledge sharing students webinar conducted by Vijayawada branch of Sikasa of ICA under the name Abhyaas with motto of the students, for the students, and by the students. This program mainly designed and planned to create the platform for the students and encourage the students to enhance their presentation skills. Definitely, I ensure this program will motivate all the students who are viewing this program. Now, let's start the program with our insured motto song. You need not stand up. Please put your hand on your heart.
Yaesha supteshu jagrati, Yaesha supteshu jagrati, Kamam 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 pursho nirvimanaha nirvimanaha, Tadeva shukrada brahma tada brahma, Tadeva amritamuchyate, Tasmin lokaha shataha, Sarve tadunatyati kaschan, etadvaita, 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 etadvaita.
Thank you. Now, I request our chairman of Vijayawada branch, C.A.K. Purnachandra, to give his opening remarks.
Thank you, ma'am. Chief guest for this 2 days session, Abhyaas, C.A. Nareshchandra Gilli sir, Chairman SARC, Regional Council Member, Session Chairman Sahati ma'am, and speakers for today's session, various student speakers, and my fellow colleagues at Management Committee, and Sikasa students, Sikasa Committee students, and all the students who have logged in for today's 2 days program, Abhyaas, which is a knowledge treat for the students, by the students, as it is captioned by our Sikasa chairperson, Shita Shirin madam. Ma'am is so keen to take the programs, conduct such type of programs to the students, that she's awaiting to when these exams will complete, because we all know that because of this COVID pandemic, exams have been postponed, and finally it was conducted successfully with the help of dynamic leadership at ICA level, and of course at regional level, our Nareshchandra Gilli sir. They have planned so meticulously that it went on very well, of course without any hiccups and without any disturbances. So since we have completed our examinations, now it's a time we have received a message, a big idea of what sir is going to plan. 2 days before only I was reading the Nareshchandra sir's message, which he shared, sir, the programs which he planned in the next 2 months, coming 2 months, since exams have been completed, and once again students will get busy in November exams. So we want to conduct in these 2 months to the full maximum. He wants to conduct the programs, and taking cue from sir, I am sure that whenever we have a management committee meeting, ma'am is full of a list of programs. She will be ready with, sir, I want to conduct these programs with the help of Nareshchandra Gilli sir, or with the help of management committee. I have tried to rope in good speakers. So as part of that, she roped in, of course, Sahiti ma'am, who is always there for the students. It goes by the student caption itself, I should say. Whenever there is a program for students, she'll raise her hand and she'll be there. I am ready for the student. Not only, especially student programs, I can see she is keenly interested in, she'll be joining in. And not only that, tomorrow session chairman also, Goda Devi ma'am also. The topics they choose also very, very relevant for the article students, especially blockchain, be it blockchain, or be it AI, or be it today's topics also. I think when gone through the transfer pricing, GST, input tax credit mechanism. So various beautiful topics they have chosen, which are very, very much need of the hour. So I request all the students to pay attention to all the students, and whenever they miss a point here and there, of course our session chairmen are there, who will walk us through the important points which if they might have missed in their deliberation. So I request all the members, all the students to keenly go through the sessions, and I'm sure it will be a knowledge, not only knowledge sharing sessions, so it will be knowledge learning sessions also. So with this brief thought, I hand over the question to Shirin ma'am. Thank you.
Thank you, sir,
Into
for
there
the
is
opening remarks.
Kelly.
Join us. Now I request our Sikasa member Krishna to introduce our today's chief guest Naresh Chandra Gilli.
Very good morning, one and all. I'm glad to introduce our SICASA, means SARC member, our today's chief guest, CA Naresh Chandra Gelli, and let me introduce him. CA Naresh Chandra Gelli, he is a qualified chartered accountant in the year 1992 and has been in practice since then. He has completed the certificate course on concurrent audit, forensic accounting and fraud detection, a qualified DSA, and independent data examination, and now pursuing valuation course. Coming to his professional achievements, he has signed a 100 balance sheet of Indian Bank as Central Statutory Auditor in the year 2007. He has rich experience in PSU audits, bank audits, statutory audits of companies, partnership firms, and etc. As part of contribution to ICAI, he was in ICAI activities since 1994. He was the chairman of Hyderabad branch of SIRC of ICAI in the year 2001 and 2. He was the regional council member from 2006 to 2015 and now again from 2018 to 2021, and also the chairman of Direct Taxes Committee of SIRC of ICAI for the year 2021. Regarding his positions held in other institutions, he is also a member of the Federation of Telangana Chamber of Commerce and Industry from the term 2019 to 21. He was the president of Hyderabad Management Association during the year 2010 and 11. With this brief intro, I welcome CA Naresh Chandra Gelli, sir, to this webinar, and I request you to address our members and students. Thank you. Over to you, sir.
Chairman of Vijayawada branch, C.A. Purnachandra Rao, SICASA chairperson, C.A. Shruti Shirin, session chairman, C.A. Sahiti, and I think future CA, Sai Krishna Teja, and all the participants here in this webinar. Morning to each one of you. So I would like to begin with hearty congratulations to the Vijayawada branch for planning to have a two-day session, Abhyaas, where you have about 12 sessions, 12 topics being covered by different speakers. And I'm sure it's very interesting with a lot of detailed, wide variety of topics being covered. So very interesting. I'm sure the students would be enriched by the participation of all these speakers. As I understand, Madam is keen on involving all those students who missed out on the national conference. So I'm sure this is the better way of making sure their all contributions are taken care and they're motivated to perform better. So I would also take their help, madam. So tomorrow in future, I will also request them to address the students in SICASA through YouTube channel. So we'll definitely be in touch. And one area where I also wanted to update was you can ask the students to share their any articles in SICASA newsletter. Every month we are coming up with a newsletter. So you can request those students to contribute there. We are also coming up with as I just was mentioning to madam, on 4th of August, we are starting the SICASA Orators Forum officially by the Chairman Board of Studies. This is more about communication, about English, how to improve English. This will all be again as your team stands by the students, for the students, and what else was that? For the students. It is only by them. So nobody else is there. Suppose there is any mistake by the student, another student will find fault in the communication and tell them this is how you should improve. So by doing that, what is happening is there is nobody to feel bad. Nobody is finding fault with you, and there is no need of feeling guilty or not guilty, but feeling ashamed of talking something wrong, or because all of us are in the same boat. There is nothing to feel bad about it. So everybody are trying to encourage. So I would request the students of Vijayawada and around these places, whoever are logged in, to log into that Orators Forum This is for you to improve your English. Friends, all of us have our own mother tongues. So we are from the side of Telugu state, so our mother tongue is Telugu. But in Tamil Nadu and other places, you have Tamil, Malayalam, Kannada, and North Belt, you have Hindi. But when you go to any other person or any other place, the business language is English. So you have to communicate in English, and unless your English is good, whatever is the level of knowledge you have, you may be a rank holder, but if your communication is not good, the prospective employer or prospective government representative, or when you go to deal with income tax or any other departments, you communicate in English, and including writing. Your drafting also is important. So unless you go through these sort of trainings, which is generally not discussed or taught in the offices, so that's where the Sikasa comes in. So either it is Vijayawada branch or Sikasa at SARC, the agenda for us is to fill the gap which you may find it in your office. Not every office will have variety of clients, all variety of clients. So somebody may be specialized into GST, somebody into income tax, somebody into audit. So those article students should not feel that they missed out on something else. So in that context, we are starting off also a series of webinars on FEMA, accounting standards, auditing standards, income tax, GST, technology. So from Monday to Friday, we'll have every day one topic being covered, one session, and on Friday, Saturday, Sunday, we'll have different topics coming up. So I would wish all the students to participate actively. Since exams are over and results are not announced, this is the best time that you can actively participate without any tension of the exam. Definitely, yes, you will be busy with your office, but you can pull off half an hour, 1 hour, 2 hours on this and ensure that your learnings improve. And you can also encourage your friends to join the Sikasa Telegram account. We have a Telegram account with more than 7,000 students. We have a YouTube channel with more than 25,000 students. And we want to reach to the maximum so that all the events that are happening in Sikasa reach to all the members. I'll also share the YouTube programs which we have conducted so far to Sikasa chairperson, madam. Maybe she can pass it on to all the students. You can just keep looking at it. We had a session recently of Mr. Patabiram. He also was talking about what is the future in the next 10 years, what is the role of CA, what is the skill you should have. So in terms of skill, unless we update our skill, we'll not be relevant. So he was talking about it, what we should be doing, how we should be doing. And above all, the theme of Sikasa for this year is achieving excellence through skill enhancement. So we thought it fit that unless maybe I'm a CA, I qualified some 29 years back. But if I just sit idle saying that I'm a CA, a matter of few years, I'll be outdated and no client will come to me. So unless I update my skill and knowledge, I'm not relevant. So that's how it happens for any professional. It's not just CA, any professional course, whether you're a doctor or an engineer, and I'm not sure how many of you are aware, including a pilot. Every pilot will have to go for 100 hours of CPE training. For us, 30 hours itself is becoming a problem for members. But for a pilot, unless he gets 100 hours of CPE training, he is not allotted any other flight next time. So that's how the toughness of upgrading the skill is important. So we should use the opportunity to enrich ourselves, and that's how we become relevant and useful to the business community. With so many changes happening at so fast pace, so it's only us, we should be educating our clients. So I wish all the participants, the speakers, the chairman and the Sikasa chairman and the session chairman all the very best, and wishing you all a great learning. Thank you very much. Thank you, madam, for inviting me.
Thank you so much, sir, for such valuable message and sparing your valuable time in spite of your busy schedule and addressing our students. Thank you so much, and definitely I will definitely inform all about the programs conducted by Sikasa of SARC to our students and make sure that they will make use of them. Thank you so much, sir.
Thank you. Thanks a lot. Thank you, Purnachandra gar. All the best, Sahiti madam. Thank you.
Thank you. Thank you, sir.
Now I request our Sikasa member Syamala to introduce our Sahiti ma'am, today's session chairman, who will guide you to the entire program. Unmute.
Good morning, ma'am. Sahiti madam is a chartered accountant from Vijayawada with a keen desire to help and nurture the dynamism in all fields. She has always been an integral part in the association, technical and cultural scenes, playing an active role even in the recent events like Youth Fest. A very dynamic person who beautifully balanced her career and raising her daughter. She, as a student earlier, held the position of the secretary in Sikasa, Vijayawada branch for the year 2015-16. She is also a Balastri Award who has keen interest in the poetry and creative writings. She has also published a book on the issue of women in the India at its core. She is also an active blogger, student friendly, and currently she was very active in organizing events and fests managed by Sikasa Committee Vijayawada. I, on behalf of Vijayawada branch and Sikasa Committee, congratulate and heartily welcome Tihe Sahiti Garu to take up the webinar. Thank you, and over to you, madam.
Yes, ma'am. Am I audible?
Oh, yes.
Good morning, one and all. Good morning, Purna sir, Shirin ma'am, and thanks for the best wishes, Naresh Gelli sir. I think he left the meeting already. Thanks for giving me this opportunity. And time and again, Vijayawada branch is coming up with so many ways to reach the students and members for knowledge gain in every possible way. National and state level conferences are one of the best ideas of ICAI as they are knowledge and fun both. I know my statement holds good only for the situation that existed before March 2020. Almost a year and a half later, the scene hasn't improved. But like always, our Vijayawada branch found out a way to carry on with routine, just like in the past, but only in the new trend, virtual hosting of several things. Many important sessions for members, helping them stay up to date with the ever-changing and latest laws and regulations, practical procedures, and several other things. And also for the students to help them stay on track and in tune with various FAs, which is helpful not only for their exam preparation, but also in the aspect of their work with their principals and immense gain of knowledge. Along with Vijayawada branch, all the branches of ICI across the country have been doing a great service to both members and students to help them in every possible way. And we must appreciate and congratulate them all for this. When you participate in a national level conference hosted by your branch, the excitement, enthusiasm, the anticipation, all these are totally unexplainable. I was fortunate enough to have many good moments when I was a student taking part in these conferences hosted by our Vijayawada branch. I got a chance of being a speaker in many conferences hosted by our branch. I worked as Sikasa secretary, and that was an amazing different kind of enjoyment being with the Sikasa team, organizing and playing the scene in a different role. And now today, I got to taste a whole new role as a session chairperson. And believe me, this is the toughest role so far. The topics chosen by the participants are most important and happening evergreen topics. I was asked to go through their presentations, and I'm amazed by the brilliance of each and every participant's work. The standard of their presentations made me forget that I was supposed to offer suggestions. I learned so many things. Got a good number of perspectives, and I'm impressed by the level of patience and hard work, because this level of performance would not be possible without great focus. I'm fortunate to be able to hear them out, even if it's virtually happening. Sure, standing before some 1,500, 2,000 plus audience and speaking in front of the podium will give you unimaginable number of butterflies, but this is no less. The focus, the hard work, and the confidence need to be just the same, whether it is physical or virtual. So I congratulate all the participants in advance for their efforts and urge all the students to make good use of this session. All the best, each and every one of you, for your presentations. Before we start, I request Sikasa team to introduce our speaker before they start the presentation.
Sahiti ma'am,
all the speakers. Yes, ma'am.
I recognize the presence of past chairman of Vijayawada branch, GS Sir Garu.
Hello, sir. Good morning, sir. Good morning, sir. Yes, sir.
Sir, are you there?
JSR garu, good morning. I request you to, I think, Sir Unnara, madam.
Adi
Join ayyaru.
join ayyaru.
I think he's muted himself.
Okay, ma'am. Please continue.
Let's continue. Okay. Yeah. So once again, I congratulate all the participants in advance for their efforts and urge all the students who are watching this to make good use of this session. Before we start the presentations, I request Sikasa team to introduce all our speakers before this make a presentation. Okay. Now let's start with the first speaker, Anurag Gupta. Team Sikasa, please introduce our speaker.
Sir joined and a few words.
Good morning, sir. Good morning, GSR, sir.
Sir, good morning, Andy. Good morning, Saiti. Good morning,
to listen to you.
Chairman Shrita Shirin ma'am. Really, there is a welcome move initiated by the Vijayawada branch Sikasa chairperson Shrita Shirin ma'am, because it is a dream comes true. Because before conducting the student national conference, we thought of conducting this type of things in a series of manner, so that each and every student who are aspiring as to be the speaker, their dreams comes to true. So we would like to do it in a regular way, and I request all the participants to make use of these things. I warmly congratulate Saiti ma'am to be expected as the today's leader.
Thank you, sir.
And also a chairman for this session. Thank you, ma'am. Thank you very much.
Thank you.
And I request this program will be the great success in the coming day. Congratulations, Shrita Shirin ma'am and your Sikasa team. Please go ahead.
Thank you, sir. Thank you so much, sir. Over to you, ma'am.
So we'll start with the topic Double Taxation Treaty by Anurag Gupta. Team Sikasa, please introduce our speaker, Anurag Gupta.
Hi, team.
Anurag Gupta, having cleared with CA Foundation with All India rank 13 and intermediate with All India rank 5. Currently doing articles in KPMG. His passion lied in the field of direct and international taxation. Over to Anurag.
All the best, Anurag. We have a time limit, it seems. Take your time, but try to stick into the limit as much as possible, time frame, and all the best. Do well.
Thank you. Thank you. Can you please start the screen sharing?
Please go ahead.
Is there no need to start the screen sharing of the presentation?
He wants to share the screen. It seems screen sharing should be.
It is not allowing him.
Yeah, I think it's got. He got.
It's blocked. It has been opened. Is my screen visible, ma'am?
Yes.
Can
I
I start?
request all the participants to stay mute so that the speaker.
Okay. So good morning, everybody. My name is Anurag Gupta. First of all, I would like to thank the team Sikasa for giving me an opportunity to speak on the topic overview of the double tax avoidance agreement. So no wasting time. First of all, let's start. First of all, we will understand that why we are studying this topic. So as you all know that with the advent of the globalization post 1991, there has been tremendous increase in the cross-border transactions across the countries. So it is important for any chartered accountant to understand the tax implications of these transactions so that we can advise our client accordingly. How he can ensure the better tax compliances and earn his better working capital. Also, there is a provision in the income tax read as 195 subsection 6 that says that any chartered accountant has to furnish the certificate for the cross-border transactions in the form 15 CB, and there is a penalty for the wrong furnishing under section 271J. So it's imperative for all the chartered accountants and all the professionals to learn the imperatives of the cross-border transactions. Moving forward, for any territory or the government to ensure the taxing rights, there are the two pillars which gives any country its taxing rights. First of all, that an assessee should be the resident of that country, or the income must be connected to that territory. At least one of that component must be present, so that any government can claim that the income generating within that territory is taxable. Either the assessee should be the resident of that country, or the income must be connected to that territory. So for example, if the non-resident has any income which is not connected with that territory, the government cannot claim the taxation rights of that country. So, moving forward, coming about the cross-border transactions, the imperative section that tells about, or the whole story that revolves around, is around section 9. What does the section 9 tells us that, and what is the need for that section 9 is summarized as follows. Section 5 provides the scope of the charge of the taxation. It reads as follows, that the income of that non-resident shall be taxable in the territory country only if that income has accrue or arise in India. Now, for ascertaining that which income, that whether the income accrue or arise in India, has been provided in section 9. Section 9 basically deals with the various aspects of the income and applies the various assumptions and tells us that whether that income accrues or arises in India. There are around subsections, 7 subsections in section 9, which tells the different aspects of the income and helps in ascertaining that whether that income accrues or arises in India. Like section 9, subsection 1, clause I tells about the aspect of the business profits. Subsection 2 and subsection 3 discusses about the salary income. Subsection 4 tells about the dividend income, interest income, and that all that. And there are the corresponding provisions in the DTAA, which we will be discussing later. Okay, so we have understood that under the section 9 there are the different aspects of the income which provides the source, which provides the taxation. Now, what is the need for the double taxation? Let's consider an example that UK company has a wholly owned subsidiary called I company in India, and I company pays the interest to the UK company. Okay, now UK company, that interest income will be charged to taxation in the UK. And similarly, that interest income, since that income is connected to the territory of India, it will also be charged according to the section 9 in the India. So there is the double taxation of the same income, or what is called as the juridical double taxation. Okay, so in order to prevent the double taxation, both the countries, say India and UK, enter into the treaty in order to avoid that double taxation. So in the preamble of every treaty, it is clearly written that the objective of that double taxation treaty is to prevent the double taxation and not to allow the double non-taxation. What is double non-taxation? Basically, the companies tries to apply that strategies which shift their profit in their low tax jurisdictions or the tax haven countries. So according to with the tremendous increase in the use of this strategy, double non-taxation, there is a buzz going in the international community about the adoption of the global minimum tax, which has been ratified by some countries of the OECD. So the global minimum tax agenda only lies to prevent the double non-taxation by ensuring a minimum taxation rate of 15% applicable to every company wherever it works in another country. So the global minimum tax agenda is going to be rise in the future as well. Okay, for coming about that double taxation, there are generally 2 types of the double taxation. One, we have considered that example is the example of juridical double taxation, when the income of the same entity is subject to the taxation in the different states. Like we have considered the example of the taxation income. What is economic double taxation? When the same income, it means that when the same income is subjected to the taxation in the hands of the different taxpayers in the 2 or more states. We will understand it with an example. Okay, suppose I company, which is situated in the India, earns a business income in India and pays the dividend to the foreign company out of its profits. So such dividend income is taxable in the hands of the different taxpayers. In India, it is taxable in the hands of the I company, and in the foreign company, it is taxable in the hands of the foreign company. So there are 2 types of the double taxation, that is juridical double taxation and economic double taxation, which the treaty tries to prevent it. In the double taxation treaty, there are the different clauses, like we have seen that there are the different aspects of the income which is covered in the section 9. Section 1 says about the 9.1 talks about the business profits, interest, dividend, etc. Similarly, in the double taxation treaty, there are the different aspects of the income which are covered. Like Article 4 tells about the resident of the contracting states, Article 6 immovable property, Article 10 dividend, etc., etc. So some of the important articles of the double taxation treaty we will try to understand. Okay, first Article 4, resident under the DTAA. First of all, it is important to understand that the treaty shall be applicable only to those individuals which are the resident of one country. Like if we want to apply the India-UK treaty, it is important that a person should either be the resident of the UK or the resident of India. If he is not the resident of either India or the UK, then the treaty will not be applicable on him. Now, what is the resident has been clearly defined in the Article 4. A resident means any person who under the laws of that state is liable to tax therein. Any person who is liable to tax in the contracting state by the reason of his resident, either through his resident, but it is not imperative that it should be he should be liable to tax only by the way of resident. He can be either by the way of domicile, place of effective management, or any other similar criterion. And also Article 4 tells us about the various situations where a person is a resident of both the countries. Such conditions are laid down in Article 4.2 and Article 4.3. And it is important to understand that if a person is not considered as a resident of both the country, then the treaty will not be applicable on him. So before analyzing the situation of any case, it is important to understand that a person who is the resident of that country. Next, business profits. It is important to understand also. Article 7 of every treaty tells us about the situation of the business profit. It says that the profits of the enterprise of the foreign company, which is situated in the foreign company, shall be taxable in the contracting state only if he has a permanent establishment in that country. So the core of Article 7 lies that the taxation of the income shall be done only if he has a permanent establishment in the contracting state, and if he has a permanent establishment, only that aspect of the income which is generated through permanent establishment shall be taxable. And in order to decide that which aspect of the income he is generated through permanent establishment, the Rule 10 of the Income Tax Act provides the clear guidance that to determine the income which is generated through the permanent establishment. So to summarize Article 7, a person's income shall be taxable in the host country only when he has a permanent establishment in that country. Similarly, Article 12, important articles in the practical case studies, royalties and fees for technical services. It says that if any situation the foreign earns the income like royalty and fees for technical service, interest, dividend, all that income shall be taxable in the India only if that income is connected to the India. Means that income shall be taxable in India, like however such royalties may be taxed in India in which they arise, and if the beneficial owner of that royalties, and that article also provides the rate of the taxation. So let's say that we have already studied that Section 9 also provides the fees for technical services taxation, and Article 12 also provides the taxation rules. So only that rule will be applicable which is more beneficial to the cessees. It is important to understand that out of the two, Section 9 and double treaty avoidance agreement, only that will be applicable which is more beneficial to the entity or the company. Okay. Now the core issue which revolves around the fees for technical services, interest, dividend, that in every article there is written that a person should be the beneficial owner of the income and the taxation shall not exceed 10%. Now what is the meaning of the beneficial owner? Let's understand it with an example. That US company, suppose US company is a wholly owned subsidiary of the UK company. There is a US company which is a wholly owned subsidiary of the UK company, and US company is a holding company of the Singapore company which is situated in the Singapore. Singapore company pays the interest to the US company. Now, whether we should apply that the beneficial owner is US or the beneficial owner is UK, it is important to analyze the whole issue and understand so as to apply the treaty, because it is imperative also while filing the Form 15 CB. Similar, the situation lies in the capital gains, that the income shall be connected within the territory of India, and that corresponding article provides the rate of the taxation. Now, important points, that for to apply all the we have studied all the articles of the double taxation treaty, there are three issues which needs to be clearly checked. That for claiming any benefit of the double taxation agreement, it is important that person must be in the possession of tax residency certificate, which provides that a person is actually a resident of that country. Like in India, we can obtain the tax residency certificate by filing the form 10FA. So it is important to analyze that whether person is in the possession of the tax treaty. Next, we have to analyze the MFN clause protocols. What is MFN? MFN, most favored nation protocols, are provided in the protocol of the every treaty. It provides that any amendment, it's suppose we are reading the India UK treaty. Okay, India UK treaty we are reading, and there is an amendment which is made to the India US treaty, and there is an MFN clause in the India UK treaty. So that amendment will be automatically applicable to the India UK treaty. This is called MFN clause. So we have to clearly understand the MFN clause, because it sometimes gives the benefit to the client, like India France have an MFN clause treaty. So we have to analyze all the amendments which is made to the other treaties. Third, it is important to understand the case laws, judgments of the Supreme Courts or the High Courts to analyze the case better. Next, the most important aspect of the application of the double tax avoidance agreement is the tax residency certificate. Like I have already told that before applying, giving the benefit of the DTAA, and also while filing the form 15 CACB, it is important, there is a column that we have to highlight that whether the person is in the possession of the tax residency certificate. It is a document which highlights that a particular person is a resident of that country. And while checking the tax residency certificate, we have to analyze that these are the contents which should be available, like the status of the taxpayer should be available, PAN of the taxpayer should be available, period, address, etc. And I have already told you that for obtaining the Indian tax residency certificate, we can obtain it by filing the form 10FA. Now, the core issues which revolves around the tax residency certificate, the most important one, let's say, consider an example that US company has a wholly owned subsidiary of I company in India. I company pays the interest to the US company dated 30th March 2022. Basically, I company has credited in its books of the accounts, and the payment is made on, say, 15th April 2022. Now, whether the TRC is required when the payment is credited or when the payment is made, we have to analyze that whether by reading the section 195, it is clearly highlights that the tax is to be deducted at the point when the payment is credited in the books of the accounts or the paid, whichever is earlier. So the TRC has to be obtained for the period when the amount is credited in the books of the accounts. Okay. Second issue highlights that when the TRC is in a different language. When the TRC is in a different language, it is important to convert it into the Indian language through the authorized notary public. Second, we are discussing about the international agreements, DTAA. It is important to highlight the term BEPS, base erosion and profit shifting. These are basically the strategies which is made by the foreign companies to artificially shift their profits to the low tax jurisdictions in order to avoid the taxation in the both countries. Like I've already told that because of these strategies adopted by the country, there is a news going in the international community. Different countries are having the discussions regarding adoption of the global minimum tax, because they feel that a large chunk of their tax is being avoided by these strategies. So I think that it is going to come in the near future, because it has already been implemented, signed by the India in the OECD as well. So in order to avoid that, global minimum tax is going to be in the future to prevent the BEPS agenda. Third, MLI. MLI can be summarized as follows: that India, that since the treaties which is signed by the different countries have been signed long years back, so there are the certain ramifications which has to be made in the treaty. So in order to avoid the changes in every treaty, an MLI has been introduced, which is basically an amended treaty which is applicable to all the treaties. Like in the treaty also there is an Article 7, but there are the certain problems which has been corrected by the multilateral instrument introduction by the OECD. Now it is important to understand that whether the MLI is applicable to all the treaties. No, first of all we have to check that whether both the countries have signed the MLI. Like we are reading the India-France treaty, we have to understand that whether the MLI has been signed by the India and France, and whether both the countries have not made the result that there is, like in the MLI there is a different article, so we have to analyze about each article that whether the country has not made a reservation or the application regarding a particular article which has to be read. Now so now with the reading of the double taxation avoidance agreement, a reading of the correspondent MLI has also been made in order to analyze the case further. So thank you for your patience hearing. I hope that I have made the justice to your valuable time. Thank you so much.
Am I audible?
Yes, ma'am.
Thank you, Anurag. Well done. You have delved into many deep concepts and issues in double taxation. Anurag has touched the topics of permanent establishment, the relevant case laws, issues relating to royalties, fees for technical services, the definition of beneficial owner, MFN clause protocols, BEPS, and many other advanced topics. Let me summarize the basic points of double taxation treaty for the students. Like Anurag said, two pillars of taxation are SSE and income. Both must be there in order to charge the tax. And an SSE must be there and he must earn some income, and either one or both must be connected to India. All students must know and understand the meaning of source and residence, which were explained by the speaker very nicely. Let me tell you, double taxation is a tax principle referring to the taxes paid twice on the same source of income. It is often an unintended consequence of the legislation, tax legislation. It is generally a negative element of a tax system. We see it as a negative element, and the authorities attempt to avoid it whenever possible, to avoid double taxation. The object and spirit of introducing Double Taxation Avoidance Agreement, DTAA, also known as Double Taxation Treaty, is to see that the income earned by a person in a particular country or territory is not taxed twice. That is, in a country where the income was earned and the country of residence. Fundamental principle of DTAA is income cannot be taxed twice. Tax cannot be avoided in both the countries. You have to pay the tax either in the source country or the residence country. And the third one is to recover taxes where income escapes assessment as per rule of law. Taxation of a particular income shall be made as per the articles which were discussed by Anurag in detail. As per the articles of DTAA, taxation shall be made as per the articles of the Double Taxation Avoidance Agreement between two countries. There are many countries in the world. A country cannot have an agreement with every other country in the world, right? Income from a particular country or place shall be taxed as per the articles of Double Taxation Avoidance Agreement with the country, with that country, if at all a DTAA exists, if at all an agreement exists. What are the relevant sections of the Indian Income Tax Act here? Section 90, 90A and 91. 90 and 90A speaks of the objects and spirit and the procedure of taxation for the income as per the terms of the agreement DTAA. 90 and 90A speaks of why there should be a DTAA and what is the procedure of taxation. To simply say, relief of tax paid in one country can be claimed as per the agreement as per section 90A, right? You all know this, you must have studied it. Now the question is how to tax when there is no agreement at all with any particular country. You know this also, but I'm just telling you, summarizing. As per section 91, tax relief has to be calculated by the SSE himself. Self-assessment is to be done. Burden of proving the genuineness of tax relief lies on the SSE himself. Anurag has touched so many advanced topics, so I'm sticking to the basics. You have explained it very nicely, Anurag. Besides the in-depth analysis of much advanced topics by the speaker, I advise the students to go through the sections 90, 90A and 91 also. And I must tell you all that our Anurag here is a ranker in CPT and IPCC. I wish you all the best in all your future endeavors, Anurag, and we hope that you secure a rank in your final examinations also. Wish you all the best. Now, over to the second topic of the session. Asset reconstruction company needs self-reconstruction first or not? By Prakhar Gupta. Team Sikasa, please introduce our speaker.
Yes, ma'am. Prakhar Gupta, a CA finalist. He has been pursuing his articleship now. He is also a certified research analyst by NISM SEBI. He is also a graduate in BCom by IGNO. Currently working as audit senior in consulting division in his own firm. He is interested in writing articles relating to finance. Now he has chosen topic related to asset reconstruction companies. And let me transfer the, let Prakhar Gupta take over the seminar, please.
Prakhar Gupta, is he on? Krishna, is he on?
Just a second. Let me contact. He's not in this webinar, I think. So let me just contact him, ma'am.
Yeah, please. Let us know quickly, Krishna, so that we can proceed to the next topic. I think the next speakers are waiting. We have to stick to the time. You're not audible. Krishna, you're not audible.
He's not even responding to the call, sir. Shall we just invite the third participant?
Let's move on to the next topic.
Yes, he's not responding.
In case he responds, or if he calls back, please let me know. We'll do what we can do. Okay, next. So moving, as our second topic speaker is not present here, we'll go to the next topic of the session, GST input tax credit by Harshit Muralidhar Kakwani. I'm sorry if I'm pronouncing it in the wrong way. Please read the profile. The right way. Sorry?
You pronounced it the right way. It's Harshit Muralidhar Kakwani.
Please introduce Harshit, Sikasa team. And all the best, Harshit. Try to stick to the time frame. All the best.
Thank you.
Harshit Muralidhar Kakwani, a young and enthusiastic professional capital market advisor and a CA student having a long journey to tell. Learning from the daily market, engaged in providing consultancy on GST to some PSUs and ventures. At the end of the day, tells all of these summed up by storytelling in nearby cafe. That's Harshit Muralidhar Kakwani from Bhopal for you. Over to Harshit. That's an
Actually, Krishna, I am sharing my screen from a different system. I am having access from a different system also. So can you please enable it from that system?
I mean, you want permission to access, to share your screen from another system, is that right?
Actually, I am having another system for screen sharing. You can see there is another name of me.
Yes.
Yes, can you please enable screen sharing to that system?
Just hold on line. Yep. Sahiti, ma'am.
Yes, Krishna.
Madam, Harshit wants access to share his screen from another system.
Yeah, sure. Whatever it takes for his presentation to go on.
Yeah. Okay.
Good morning to the respected judges, my dear friends, and every dignitary present here. I, Harshit Muralidhar Kakwani from the city of Lakes, Bhopal, feel privileged and honored to present my topic on a very crucial topic in GST that is considered as the backbone of GST. The topic is input tax credit. Now, sir, what is input tax credit? Is it really important for GST? Then, my dear friend, it is the backbone of GST. I stick to my point, it is the backbone of GST because If you miss, they hit. There is a concept in cricket, we call it you miss, they hit. And the same topic is here in GST. If you miss to avail input tax credit on a right manner, the department will hit you. The department will hit you with Section 50. Section 50 levies interest over you. And further, they can levy penalty over you. Now, sir, every time will this penalty or interest will be levied over us? No, sir. There is a contemporary case law by the state of Bihar. In the state of Bihar, a case law is there, commercial steel engineering versus state of Bihar. Here it was held that if you have taken input tax credit wrongly, but that input tax credit is unutilized and available in your electronic credit ledger, then you are not liable to pay interest at the rate of 18% or 24% as stated under Section 50. Now, sir, coming to the basics, before I go to advanced level in input tax credit, let's go to basics. Now, sir, who can avail input tax credit? Sir, input tax credit can be availed by any business. Now, you will ask me what businesses as per GST. Now, sir, business includes any trade, commerce, in any activity, profession, vocation, etc. Whether it is in any activity incidental or ancillary to it, or it is any activity of same nature, even if its volume, continuity, or frequency is not there. For example, sir, you are having a car showroom, but you sell only one car in a year. Are you still a business? Yes, my dear friend, you are still a business. Even if you sell no car there, but you are there for conduct of business. Your purpose is to conduct some activity, then you are into business. Now, sir, next, supply or acquisition of goods or services, including capital goods or services, in connection with commencement or closure of business. For example, sir, I am involved in selling buildings to people who want to conduct business, Is it a business activity? Yes, my dear friend, it is again a business activity. For example, sir, I am an official liquidator. Am I engaged in business activity as per GST? Yes, sir. I am still engaged in the business activity, even though it is for the closure of a business. Now, sir, next is provision of facilities by club, association, or society. For example, sir, we are having a famous society. I know a famous society, and I am damn sure that everyone knows that society. That society name is Gokuldham Society. So is it having a business when it provides services to its members, like Jethaji, etc.? Then, my dear friend, yes, they are again into business. If any housing society or any club near you is engaged in providing services to its members, whether or not for consideration is totally irrelevant here. It is again to be said to be engaged in business. Now, sir, next is admission to any premises. For example, there is an amusement park in my city. If I am entering into it and for that they are charging me money, is it a business activity? Then, my dear friend, yes, again, it is a business activity because admission to premises is also a business activity. Now, sir, next is services as holder of an office. When we capitulate to the provision of directorships to the company, we are holding an office. For example, even if I am holding as a trustee of any trust, that is also engaged in a business activity. Now, so next is activities of a race club, including by way of initialization or a license to bookmaker or activities of a licensed bookmaker in such club. For example, sir, in Mumbai, there is something which is very much popular. That's horse racing. If I am a bookie there, then it is also a business activity. You cannot say that it is a horse racing club. You cannot charge GST over it. It is a business activity there. And sir, at last, any activity by government or local authority as public authorities is also a business activity. For example, sir, if you are having a Nagar Nigam, we call it in Central India Nagar Nigam, the municipal corporation. If that municipal corporation is engaged in providing services to the local citizens of that city, then it is also a business activity. For example, sir, my office is located in the municipal corporation building and I am paying rent over that. That is also a business activity. We are not talking here about the taxability. We are talking about business activity, and it is a business activity. Now, sir, coming to the next point, what is meaning of exempted supply? We know that there are many supplies. There is zero-rated supply, there is taxable supply, there is exempted supply. The main purpose is exempted supply because no GST is levied over exempted supply. Sir, exempted supply means supply attracting nil rate of tax. Any product or service which is having zero rate or nil rate of tax is also an exempt supply. And so supply which is totally exempted from CGST or IGST. How a supply is exempted from CGST or IGST? Sir, it is exempted by way of notification or it is provided in the clauses of the Act that such services shall be exempt from a certain date. That's it is also to be considered as an exempt supply. And so next is it includes non-taxable supply. We know that there are many supplies that are not taxable under GST. For example, sir, liquor for human consumption, alcohol for human consumption and petroleum is not considered under GST as of now, that it shall also be included in the exempt supply. That next thing is, sir, what is input? What we actually call input. So input means goods or services, as well as goods shall be bifurcated into two parts. First is input goods, second is capital goods. What is input goods? So for example, I am a trader, I am selling you something. The product that I am selling you, I must have purchased from somewhere, or I must have manufactured. That is my input good for me. And sir, what is capital good? For example, I am a trader and I have purchased furniture for my showroom. Then that furniture shall be considered as a capital good. And so what is services? For example, sir, I am a trader. I have engaged my chartered accountant for any chartered accountancy services permitted. Then, sir, that service by chartered accountant to me shall qualify as input services, and I shall be eligible for that input provided on that input services, except to the conditions that apportionment shall be done in the respective fields. Coming next, sir, what is input tax credit? Input tax credit means any input derived from forward charge, that is when you purchase a product that GST is levied over it, that is input for you. And sir, includes any tax paid on reverse charge as well as on import of goods. My friends, I expect that you know that while importing goods, we are liable to pay IGST over that good. So that IGST shall also be considered as an input tax credit. And when there are certain circumstances where the supplier is not required to charge GST under forward charge, but the recipient of goods or services is liable to charge GST to pay GST to the government, that shall also be included as an input tax credit. What are the cases? Sir, what are the cases where RCM is applicable or reverse charge mechanism is applicable? Actually, I'm not considering it in full in this presentation, but for a precise knowledge, I can tell that goods transport agency services, advocate services, security services to body corporates, and many more are there in the list, shall be considered as input tax credit under reverse charge mechanism. Now, sir, we have included everything. What shall we exclude while calculating input tax credit? So, sir, for exclusion purpose, tax paid to composition dealer. I think everyone is familiar about section 10, subsection 1, subsection 2, and subsection 2A. That a person shall be eligible to practice as a composition dealer, but he shall levy taxes only at the rate of 1%, 5%, as the rate may be prescribed for restaurants as well as traders as well as the providers of services. Whereas composition shall not be eligible, whereas a person engaged in the supply of tobacco, ice cream shall not be eligible for the composition scheme. For example, I am purchasing goods from a composition dealer. I shall not be eligible for the tax I pay to that composition dealer, because it is the basic condition of GST that the tax is paid to composition dealer are not an eligible input tax credit. Now, sir, coming to the next, what is inward supply? What is inward supply for me? Sir, inward supply is either I purchase the goods, Second is either I acquire the goods. How I'm acquiring goods? Sir, by merger, acquisition, or any other means. If I acquire certain goods, then it is also an inward supply for me. And sir, by any other means. Any other means, sir, what can be the condition? For example, in a fight, I want something that shall also be considered as input tax credit, irrespective of the legality of that certain item. It shall be considered as an inward supply. And sir, when we talk about inward supply, there is no relevance of consideration. Consideration can be paid or consideration cannot be paid. So it shall not be focused on. Now, sir, what is zero-rated supply? Zero-rated supply includes export of goods and services and supply of goods and services to SEZ developer or SEZ units. So, sir, zero-rated supply is a different concept. Now, sir, what are the basic conditions for availment of ITC? What are the basic conditions for availment of ITC? I would like to go this flowchart with example on each and every point. For example, sir, I am an unregistered dealer. Am I eligible to have that input tax credit? Then the answer is no. If I am unregistered dealer, I cannot collect that input tax credit on my own name. Now, sir, second is that product or services, that inward supply that we discussed, shall be used or intended to be used in the course of furtherance of the business. For example, you are having an ice cream parlor. You are purchasing ice cream for an ice cream manufacturer. That shall be, the tax levied on that shall be input tax credit, even if you use that or you intend to use that. What is intent to use? Sir, we are totally committed to use that product, but that could not be used right now. That is intent to use. That is intention to use that product. And further, these conditions are to be fulfilled. The person shall have a valid tax invoice. If I am not having a valid tax invoice, the GST department can anytime reduce my input tax credit to the proportion I am not having that valid tax invoice. And sir, next condition is he must have received goods and or services. For example, sir, if I am just having an input tax credit, I am not eligible for input tax. If I am having an invoice, I am not eligible for input tax credit. I must receive goods or services. Now, sir, there are certain circumstances when the goods are not actually received by me. For example, there is a friend of mine in Hyderabad and there is a friend of mine in Vijayawada. My Hyderabad friend is a supplier and Vijayawada friend is a customer. My Vijayawada friend tells me that I need certain products that my friend from Hyderabad can supply. I won't ask Hyderabad friend to send that goods to me and then I will send to Vijayawada. I will directly ask him to send from Hyderabad to Vijayawada. Even though I am not collecting goods on my own, that is still to be considered as an eligible condition for input tax credit. And so next thing, tax on such supply shall be paid by the supplier. Sir, please note that if your supplier is not filing GST returns on time, then you are not eligible for that input tax credit of the certain month in which such tax is not paid. And sir, he should have furnished return under section 39. If you are not furnishing return under section 39, how can you be eligible to avail the input tax credit? So please note these conditions. Also, sir, there is a new rule that was introduced some 2 years back by the Ministry of Finance that says that Rule 36 sub Rule 4, Rule 36 Rule sub Rule 4 says that a person shall be eligible to avail input tax credit only to a certain proportion that is available in the GST or 2A form available at the GST portal. But sir, my personal opinion over is that it is totally unconstitutional rule because a rule can never overrule the act. And in the act, there is still a pendency for insertion of section 16 subsection 2A. Till the time subsection 2A is not inserted in the act, you cannot prohibit a person to avail input tax credit. I again repeat, you cannot prohibit a person to avail input tax credit just by the plea of Rule 36 sub Rule 4. Even if it is not inserted under section 16, then I am not prohibited or no one can stop me to avail input tax credit provided my other conditions are fulfilled over it. Now, sir, next condition is apportionment of credit under section 17. Sir, what is apportionment of credit? For example, sir, I am a supplier of exempted goods as well as taxable goods. Then, sir, all the credit that is totally eligible for exempted goods shall be ignored. All the credit that is totally eligible for taxable supplies shall be taken in full. But sir, whereas there is a common credit, for example, as I told in the example, that a chartered accountant service I am availing for my business, then that common credit shall be apportionate to the proportion of exempt or nil-rated supplies and to the proportion of taxable and zero-rated supplies. It cannot be taken in 100%. It shall be availed in that proportion. For this, sir, banks and NBFCs are having a special exemption. The government has said that you don't want to apportion the goods and services as exempt or as taxable. You can do is you can take 50% as 50% of common credit as taxable and 50% of common credit as exempted. Also, sir, if you are having input tax credit from a person registered under the same PAN, for example, I am a bank, I am having a branch in Maharashtra, and I am having a PAN in say Madhya Pradesh. So if I am having supplies from Madhya Pradesh to Maharashtra branch, then that input tax credit shall not be availed in 50-50 proportion. It shall be availed in 100% proportion, even though it is a common credit. Now, sir, next, there is an important aspect that is block credit under section 17(5). Now, sir, block credit is essential because every business shall consider that these supplies shall not be eligible for input tax credit being availed by him. If he is availing it, he is in a great doubt. Sir, what is block credit under section 17.5? So there are certain credits that are not eligible to be taken by any person. For example, let's start with the block credit list. First is motor vehicle. If you are having a motor vehicle with a certain capacity of less than 13%, then you are not eligible for credit. Even if you have paid in lakhs for that tax over that, you are not eligible for that input tax credit. Next is, sir, you are purchasing an airline. For example, we have a picture of Vijay Mallya ji here. If he was not a owner of Kingfisher Airlines, for example, he must have purchased that airline for his own fund, for his own travel, then he shall not be eligible for that. Then the next is vessel. If you are having a vessel and you have purchased it for own, you shall not be eligible for that. But sir, there is an exception to everything. So why not there be an exception to block credit under section 17.5? If I am purchasing a motor vehicle, or I am purchasing a vessel, or I am purchasing an aircraft for further supply. For example, sir, I am an aviation model selling company, and I am purchasing aircrafts to sell it to another person. Then I shall be eligible for input tax credit on the purchased aircraft. And the second is, if I am Vijay Mallya ji, if I am involved in making people travel through my airlines, or through my motor vehicle, or through my vessels, then I am eligible for that also. And so next is, if I am an air pilot trainer, if I am having an airplane just to teach people how to travel by it, then it shall also be considered as an eligible credit. Now, sir, block credit is revolving around these things in the first. If you have paid for repair and maintenance of these motor vehicles, vessels, and aircraft, or you have paid for insurance of these motor vehicle, vessels, and aircrafts, or if you have entered into lease agreement or rental agreement and you are paying taxes over that for these above mentioned things, then again you won't be eligible for that input tax credit. Now, sir, next is entry to clubs, health and fitness center. If, for example, I am making my employees go to a club and I am paying taxes over that club, I shall not be eligible for input tax credit of that. For example, I am so much fitness free. I am sending my employees every Saturday to a health club and I am paying taxes over that health club. Still, I am not eligible for that. Provided, sir, there shall not be a legal obligation over me to send my employees or to avail such services. For example, sir, if you see in defense, the GST is not applicable, but there is an obligation to send employees to gyms every week. So if I am doing it under an obligation, I shall be eligible for input tax credit of it. Then, sir, next thing is what every person is afraid of. That is detention of vehicle. If on detention of vehicle, I am paying any extra tax, then the person who is recipient of such goods shall not be eligible to take credit of that extra tax. Now, sir, next is, if I am giving travel benefits to my employees on vacation, whether it is through leave travel encashment or
Krishna? Problem from his side, I guess. Krishna, are you there?
Ma'am,
I think Harshit got an internet problem.
okay.
Is he back? I think he's back. You're not audible, Harshit.
His voice is
hello, am I audible now?
Yeah, please continue. Please continue.
Actually, ma'am, I cannot remember since I work at my residence.
Sorry.
So
Didn't get you.
Actually, I am not having access to my PC because of power cut.
Oh, so is it
So
possible?
can I continue with?
Yeah, or sure.
Can I continue without?
Yes.
Yeah.
Yes.
So reach to the topic of section 17.5. There we covered the services that are considered as block credit. Further, sir, there is a second part that is engaged in the construction or works contract services for immovable properties. For example, sir, if I am having services for construction of an immovable property, I am still ineligible for that. except that I am engaged in the activity providing works contract services or construction services. For example, sir, if a builder is having work contract services from any other person, he shall be eligible for availing the input tax credit on the same. Whereas, sir, me being a non-builder or non-works contractor provider, if I am having services from a works contractor for construction of my own, then I am not eligible for input tax credit. Even if I am having the services of works contractor for construction of my office building, even though it is connected with the office, I am still not eligible for the input tax credit. Provided, sir, if I am, for example, I am a factory owner, I am paying works contractor for construction of a plant and machinery, then I am eligible for that. But where it is connected with the construction of a building, then I am not eligible for it. Next thing is, sir, construction. If I am doing construction on my own, for example, I am the Bob the builder and I am constructing a home for myself, or I am constructing an office building for myself, then, sir, again, I am not eligible for input tax credit on such construction. Now, sir, coming to the conclusion part, what I can say is input tax credit serves as the backbone of GST. Still, there are many circumstances where we can avail input tax credit. For example, sir, I am unregistered dealer until now, or I am in a composition levy scheme, and I opt out for regular scheme, or I get registered, then I shall be eligible for input tax credit from the date prior to the date on which I have applied for the registration. I shall be eligible for all the inputs lying over that on that date. But, sir, I won't be eligible for input on capital goods over that date. If I am having capital goods for any amount, I shall not be eligible for input tax credit of. Now, sir, there are many special circumstances where you need to reverse your input tax credit. What are those circumstances? So, for example, you were having capital goods and you sold such capital goods. If you are selling such capital goods, you have to reduce the input tax credit availed by 5% every quarter. For example, sir, I am having 100 rupee input tax credit on capital goods and I sold those capital goods before expiry of 60 months. Then, sir, for each quarter, I have to reduce 5% of input tax credit. That's all from my side. Thank you for being a patient audience.
In my opinion, giving only 15 minutes for a topic like ITC is not correct. How will it be sufficient to cover the backbone of GST, like our friend just said? How will it be sufficient to cover the topic of ITC in just 15 minutes? I congratulate you, Harshit, for attempting the undoable with the greatest confidence. Just give me a moment, I have to take this call. Sorry, am I audible?
Yes, ma'am.
So I congratulate you, Harshit. You have given an excellent presentation, especially the topics relating to ITC relating to RCM and the block credit. That explanation was really very nice. In spite of losing your power, you continued it. Actually, professional advisor and CA student, that's what they read in your profile. That sounded pretty amazing. Actually, being a CA student, you're also a professional advisor. And I would also like to appreciate your oration skills. You got me speechless for that starting introduction and thing. Everything is very nice. I don't know what else you left. Probably I got a call that I had to take. I think I missed it probably, but have you explained the reversal of ITC process? Reversal of ITC?
Ma'am, at the last, I just did it a little because the major content.
It's okay. You have covered almost, you have summed it up almost everything. That's really great. Just let me conclude it by discussing a few minutes about a reversal of input tax credit. ITC can be availed on goods and services for business purposes. If they are used for non-business personal purposes or for making exempt supplies, it cannot be claimed, just like Harshit explained us very nicely. Apart from these, there are certain other situations where ITC has to be reversed. ITC will be reversed in the following cases. Non-payment of invoices in 180 days. ITC will have to be reversed for invoices which were not paid within 180 days of issue. credit note issued to ISD, input service distributed by the seller, and inputs used partly for business and partly for exempted supplies or personal use. I prefer not going into details about this because it will take a lot of time. We have other speakers also waiting for us. I'm just summarizing the things for which ITC has to be reversed: non-payment of invoices in 180 days, credit note issued to input service distributed by seller, inputs partly for business purpose and partly for exempted supplies or for personal use. ITC should be reversed proportionately. Capital goods partly for business and partly for exempted or personal use, and ITC reversed is less than required. Once the annual return is furnished, if the total ITC on inputs of exempted or non-business purpose is more than the ITC that is actually reversed during the year, then the difference amount will have to be added to the output tax liability. Interest will also be applicable. And the details of reversal of ITC will have to be furnished in GSTR 3B. Segregation of ITC into business and personal use and subsequent calculations, a big concept, probably for another session, another time. Anyway, excellent presentation, Harshit. I congratulate you. I wish you all the best. Thank you very much for participating in this. Over to the next topic. Please introduce the speaker team, Sikasa.
Abhyaas Pradhan is a leadership expert who delivers high-energy keynotes, presentations that challenge his audience to leverage their focus and pay attention to what matters most at work and in life. He is pursuing his articleship under Chennai, Tamil Nadu, earned his BCom from Utkal University, Odisha, and the Certified Speaking Professional designation from the same university by completing Diploma in Communicative English. He has received numerous awards as a professional speaker from national and regional conferences organized by ICAI and other institutions. His strong background is learning, development, and managing implementable strategies that help students to avoid distraction, stop interpretations, prioritize daily objectives, and say no to requests that steal time from real goals and priorities. Over to Avinash.
Is he connected?
Yes, ma'am, I'm connected. I'm audible now. Hello.
Our speaker on the second topic of today, asset reconstruction company requires self-reconstruction or not. Prakhar Gupta has got some internet issues due to bad weather. He joined the meeting first and then he had to leave due to the internet connection issues. In case he joins back, please let me know. Shamala.
Okay, ma'am. Okay.
Hello. Hello.
You're audible. You're muted again. You're muted again.
Now it's okay.
Yeah. Please try to speak more loudly.
Okay. Hi everyone. This is Abhyaas here, and I'm exploring the topic of listing of exemptions under GST. And first of all, Subhakansa was the Vijayawada.
Mr. Pradhan, sorry to interrupt, but I can't hear you. I mean, please speak a bit loudly. Sorry for the interruption. Just a bit loudly, okay?
Is it audible or not?
Okay, carry on, carry on. Please continue. All the best.
Thank you. So once again, Subhakansa, everyone who is watching me, and this is the topic from end of Abhyaas, and my topic is listing of exemption under GST. So here the two words is coming. First of all, one is exemption, and second one is GST. So we have to know the meaning of exemption here, because it's not all about topic. It's all about means because we are the ultimate consumer and we are paying the GST, but we should know under which product and services or under which goods and services there is a certain list which is GST is not imposed here. So the exemption it's basically the free of publication and liability. And in case of the GST, it means there is some goods and especially from services. So I will discuss that means in my coming slides. So let's go to the first slides. Here you can see here there is a number of exemptions is 102 exemptions as on current date for the exemption on the goods and services. Especially I'm going to discuss about the services first. So my first topic will be government related exemptions. So here if you see the government related exemption, it means there is two parties coming here. One is to government and the second one is by the government. To government means the services we are providing to the government, and by government means government providing the services by two different institutions like postals and all. So the two government here there is 5 to 6 exemption is there. The first is the pure labor services. If the pure labor services to provided to the government, here government includes, you can see here in the last of my here I mentioned that government includes the central government, state government, union territory and local authority for the purpose. And the different the second one is the services to the government by the GSTN, and the third one is the training program, the different training program that which expenditure is borne by the government, that is also exempt from the GST. And the fourth one is the insurance premium. The insurance premium, which is premium is paid by the government, that also exempt from the GST. And the fair price of where commissioner and margin is paid, that also exempt from GST and by the government entities. And the work contract service supplied by the government entity, that also means in the category under the two government, so it is exempt from the GST. And after that, by the government. So here by the government, one question is coming: what means by the government? What are the services we are rendering from the central or state government, or as I mentioned, the union territory or local? So here there is 4 terms is there. One is taxable in all cases, exempt in all cases. One is renting of immovable property and other services. Here, as you can see my presentation, there is I divided the taxable in all cases into 2 groups. One is NCM, that means it is forward charge, and one is RPM, that is reverse charge mechanism. So here the first topic is the speed post and express parcel post relating to the post, then life insurance, then agency services in relation to vessel and aircraft, transportation of the goods and purchase. These are taxable in all cases, and exempt in all cases is in relation to municipality or panchayat if the services provided by the government in relation to municipality or panchayat which is in semi-urban or urban areas, and government to government services is provided by the government, the telecom operators for use of the spectrum, and after that use of natural resources and agriculture, registration of testing and safety fire license, then passport and visa driving license, as you can see, then service in relation to inspection and content and stopping after hours. So the first question is why we should very much acquainted about exempt and taxable, because the question is arising whether you impose the goods and services on particular services or not. Then renting of the immovable property. So if you see that taxable only in case of business entity, so it's mainly irrespective of turnover. So it is means it is imposed on the renting of immovable property, and the last side is other services. The other services is, as I can mention the underline also, the business entities which turnover in preceding financial year is less than 20 crore, and they are completely exempt, and it is optional for them to register and pay. Then RCM will apply here, and I discussed here the NCM, and RCM also here apply. And I'm going to now the next slide. The next slide is talking about transportation. I discussed first of government, and the second part is the transportation. Here the transportation, 13 exemptions is included here. One is goods and one is passengers. So for the goods, when the goods is transporting from one place to another, it's by the mode of road, or by the mode of rail, or by the mode of vessel, or by the mode of AAR. And the first term is the road. It is described about the GTA. Other than GTA, it is exemption from the GST. After that, transportation of agricultural product like milk, soil, food grains, false rice stores, organic manure, newspaper, relief material to electricity. They're completely, if it is in the mode of transportation by rail, it is completely exemption from GST. And after that, vessel, that means the ships and the transportation which is take place in between domestic or domestic territory. For example, I'm supplying from Chennai to Vizag. So here if the inland button is Indian customer station to outstation India thing, it is applicable to 1390 on 18 and transportation good listing same as in the case of railways also. So and after that the last one is air. That means the transportation if it is take place in by the mode of air. So some there is I explain also from outside India to custom station and Indian customer station to outside India. It is exemption from the GST. So let's discuss about the next slides. It's all about the renting related 5 exemption is there. And if you see the exemption of the goods and services, it's like question. So, but I tried to what do you call it, that impose into some of the slides so that one brief explanation I will tell. So the first thing is the renting related with the house property, residential dwelling for the residential use. Then motor vehicle. If you are rented for to GTA and rented to if it is more than 12, means less than 12 passenger. So in this case, it is exemption from the completely exempt from the GST. And after that, the service by hotel or inn or guest. And the most important thing is if your hotel fee is less than 1,000, so no need to bother about the GST and all. So and after that, the pure labor contract. So there is 2 exemption here in pure labor contract. One is construction installation repair under housing for all under Pradhan Mantri Awas Yojana. Here I'm highlighting here only under the Pradhan Mantri Awas Yojana is completely exemption from the GST. And construction, erection and installation pertaining to a single residence unit. If you are a single residence unit you are constructing, it is completely exemption from the GST. Then insurance services, there is 6 exemption includes under the insurance service. Here the first of the defense, our defense includes Army, Naval or Air Force. It's completely if it is provided by way of NPS, National Pension Scheme, it is completely exempt from the GST. And the general insurance and free insurance, hot cattle agriculture, farm set, export credit insurance, as you can see, and Pradhan Mantri Suraksha Fasal Bima Yojana that is offering to our farmers, it is completely exempt from the GST. And the life insurance and free insurance 36A, that is Janashri Bima Yojana, Aam Aadmi Bima Yojana, and Jan Dhan Yojana that is launched by our Honorable Prime Minister Pradhan Mantri Modi ji, and Jeevan Jyoti and Vijay Bandhan. Then these are the particular scheme where the GST is completely exempt. And the next slide is talking about the recreational services. The recreational services relating to your arts and culture. Here some example I have given. The first thing is if your services by way of admission to a museum, national park, or wildlife sanctuary, a tiger reserve, zoo. In this case, it is completely there is 8 exemption in recreational services. So the first is admission about that I explained the museum, national park or wildlife. Then performance related to your folk or classical arts, music, dance and theater. This is completely exempt from the GST. And after that, training or coaching in recreational activity relating to it, and highlighting here it's relating to only arts and culture or sports by charitable entities registered under section 12A. It is completely exempt from service. These are the services which is completely exempt from GST. And after that, religious tour. If you are doing the religious tour, then it is particularly mentioned that that is Kuman, Mandal, and HA and respect of religious pilgrim facilitated. It is listing. It is particular place. It is listed by the GST laws. It is completely exempt from the GST. Then there is the next thing, which healthcare services. So as you know that the common people also very much relevant and they are dependent upon the healthcare services. So comment what the section is saying here. The section is saying that if the healthcare services is relating to veterinary clinic, food block brand, then healthcare services, the transportation of a patient, common biomedical waste treatment, these are completely exempt from the GST. And my friends, I'm trying to briefly explain about everything because time is very precious for 15 days only allotted to me. And after that, listing of exemption of services under GST law, that is agriculture related service. So here if you are talking about the agriculture, there is some exemptions also. That is for 54 and 53A. One is called cultivation of plants and repairing of that is rearing of animals, except the rearing of horses. Then agriculture operations relating to directly to the production of agriculture produce, including cultivation. Then supply of farm labors. Then process including in the agriculture process. I mean in the agriculture process, the process involved in that. Renting and leasing and agro machineries and pack and land. Then loading and unloading, packing, storing and warehousing of agriculture products like that we are doing in the godown. then agriculture through extension, agriculture produce marketing committee, then all the things relating to agriculture, especially that is our the serial number is 54 and 53A, is completely exemption from the GST. And then intermediate production in process of job works. If as you can see, the intermediate production process relating to the job works means government also allowing some job workers duties to our common people, so that it is completely exempt from the GST. And then fruits and vegetables also services by way of pre-conditioning or pre-cooling to our vegetables, so that it will be fresh at a time of consumption, so it is completely exempt from the GST. And then cold chain development, also cold chain development relating to your cold chain knowledge dissemination, and then relating to agriculture, Ministry of Agriculture, Corporation, Farmers, welfare duty, because government is thinking about welfare, so that completely it is exempt from the GST. So I would like to discuss in my next slides. It is sports training and education. So government also thinking about the fitness towards the common people, so so everybody should fit. Then so that is why government is providing the exemption also in sports training and education. The sports relating to I just briefly mentioned here, the sports of federation, association, school and universities. The trophy takes place between the schools and inter-school or inter-school. Then central civil services, sports and board. After that, national games under the Olympics, under Panchayat Yuva, that a Krida Health Abhyaas, that is takes place including village to village at a time of some festivals, and training. The training is relating to the National School Development Corporation, Sector Skill Council. These are the listed training institutes where means the exemption is providing to the basically on the services and the assessment agency, then training partners, then scheme implemented by NSDC. Then we are talking about the education, that is Shiksha, and it is called. I'd like to discuss about that is serial number 66 here. Especially in the education, there is some clauses by an education institute with student, faculty, or staff, entrepreneur, when services provided to them. It is an entrance examination fees taken by the education institution to an education institution, then transportation, catering, security and cleaning, housekeeping services relating to education, where the ultimate purpose is to give the education to the students. So that is a completely exemption from the GST, and in the mentioned cases, supply of online education and journal and free periodicals, because it is completely beneficial at the time of the pandemic like COVID. It is completely exemption from the GST. And in the next slide, I would like to discuss the other services, with 18 exempted services relating to this. The first is charitable entities. So as you can see that the word is itself saying that charitable entity, because we are giving something, means if you are having more, you are just you are donating in charity. So this so your services are health, education, religion, environment. If you are deploying your money in the health or education or religion or environment, it is completely exemption from the GST. And the going concern, if the going concern is particularly talking about the services by way of transfer of going concern as a whole or independent part of thereof. That means the services you are providing in a continuous basis, as the term is going concern is talking about, is also exemption from the services under the GST law. Then listing of exemption from the GST law, I am talking about the electricity, that is transmission or distribution of electricity by electricity transmission or distribution utility. Then finance charges, the finance charges relating to extend the deposits.
Abhyaas, you have to wrap it up. You have a minute to go.
Yeah.
Please close it in a minute.
Okay, thank you. Then card swipe, then intermediary, then inquiry, then advocate and arbitral tribunal, technology, news to PTI, then library, then reorganizer, then sorting. These are the listing of exemption of services under the GST laws. So as the time allotted to me, I would like to conclude here. So here listing of some of the other services also there, that is diplomatic, RTI, WASCOM and unions. So here unions is a limit up to 7,500. I marked here. Then specific exemption, apart from all the slides, specific exemption, there is 4 exemptions also there. By RBI, services received by RBI for forex, that is foreign exchange reserve management from outside India. By foreign tourists, services by tour operators or tour conduct fully outside India. Then import of services by government, section 12A entities, individual for personal consumption. Then SEZ, the special economic zone, it is import from outside India by SEZ. It is completely exemption under GST. It is specified under the GST law. So I would like to, if any question will be there, I would like to answer it. So I'll wait for the 30-second note. So please, any question is there, I would like to answer it.
We'll provide the participants with your email ID and you can answer the questions directly from your mail. Okay.
Okay, thank you, ma'am.
Are you done with your presentation?
Yes, yes. I'd like to conclude here. Thank you very much for giving opportunity, and I gave my best. Thank you. Thank you. Thank you.
Right. Another big topic to be summarized in just 15 minutes. We must applaud Abhyaas here for the very neat presentation. What do I say? He attempted to cover almost everything and he succeeded also. I know the time frame which you are given is restricted, but still you have done a great job. As Abhyaas here covered almost all the exemption list of exemptions, let me explain you the background of exemption, giving exemptions under GST here. Understanding the taxability also involves knowing whether the item is exempt or not under GST. Due to the scope of taxable supplies being broadened under the GST scheme, exemptions have been clearly defined. If you know the exemption list, it is not enough. You have to understand the implication of each and every item being exempt. It is as important as any other thing. Because certain conditions are attached to those items, like reversal of ITC, etc. These conditions are there. So you have to understand the implication of why that item is exempt, why it is included in the list of exemptions. Also, what can be nil rated today may become may become taxable at a higher rate in the future. Hence, and the vice versa also. Hence, clear understanding and classifying the terms such as nil rated, exempt, zero rated, non-GST supplies under GST is very important. What is an exempt supply? It comprises of 3 types of supplies. Like Harshit told us in the earlier topic discussion, supplies taxable at a nil rate, that is 0%. Supplies that are wholly or partially exempted from CGST or IGST by way of a notification, list of exemptions, and non-taxable supplies as defined under section 2 subsection 78. Example, alcoholic liquor for human consumption, etc. There are few items that fall within the purview of GST. They are not out of the scope of GST, but the rate of GST for those items has not yet been announced or notified for those items, which are petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel. They are not out of GST scope, but the rate for them has not been given yet. Who is eligible? Who is empowered to grant this exemption list, grant exemptions of item from GST, central or state governments? And few conditions have to be met. Exemption that are given should be in public interest. They should be given by way of issue of notification. Those exemptions must be recommended by the GST Council. Absolute or conditional exemption may be given for any good or services of any specified description. Example, exemption by way of special order, not notification, may be granted when only in exceptional circumstances. Generally, it is given by notification, but in exceptional circumstances, some items may be exempted by way of special order also. And a registered person supplying the goods and or services is not entitled to collect tax higher than the effective rate. Okay. Only central government and state government are empowered to give exemptions. And there are 3 types of exemptions: absolute, conditional, and partial exemption. So this is not necessary to discuss now. We have another speaker waiting for us. Just let me wrap the exemption topic with one last point. I think the speaker has missed to mention that. I know he has many things to say. That's why I'm covering it for him. Exemption under one GST law, is it effective on another GST law? Suppose there is an exemption under CGST Act. It is deemed that suppose an item is exempt under CGST Act. That item is deemed to be exempt under SGST and UTGST Act also, but no auto application of exemption under IGST and vice versa also. Okay, various questions arise in this exemption issues regarding invoices, returns, e-way bills in respect of exempt supplies, as all these are interlinked concepts. Few of them being like, should exempt supplies be separately reported in GSTR 1 and 3B? Yes, many issues come, and we'll have another session for us regarding GST exemptions. I think Vijayawada branch has already given many good sessions about this. Students can see and know from those sessions. Thank you, Abhinash, once again for the beautiful presentation. Over to the last topic of today's session. Please introduce the speaker, Krishna.
Yes, ma'am. The next speaker, K. Bharati from Palani, and she's undergoing her third year of articleship in Tirupur. And she is also a graduate from Chennai and also presented her, also made a presentation from Tirupur ICAI and was awarded the best presentation by the conference. Over to you, Bharati.
Yeah, hi. Is this audible?
Yes, it is audible, Bharati.
Yeah, thank you.
Bharati, I'll take just one moment. It's 12:40, so please try to stick to your time frame of 15 minutes, okay?
Yeah, okay, ma'am. Ma'am, there is an issue for sharing screen. Wait, can you give me a minute to see that?
Sure. It's okay.
Can I rejoin, ma'am? It asks me to quit and rejoin to share the screen. Or can I explain without the screen sharing?
Whatever is easy for you. I mean, can you explain it without screen sharing? I think
Yeah,
you've got
yeah,
a presentation, right?
Yeah, no problem, ma'am. I can explain without screen sharing.
No, I think you need your presentation to be shown, right?
Yeah, yes, ma'am. But
rejoin, it's okay.
Yeah.
In case it doesn't support even the next time, then you can go without presentation.
Yeah, thank you, ma'am. Ma'am, host has to give enable to share my screen.
Krishna, Shyamala, whoever is there, please help her once, please.
Hold on.
I think it's shared, I guess. Is this visible?
Yeah. Please start.
Yeah, 1 second. Hi, good afternoon to everyone. I am Bharati here to present a paper on transfer pricing. I'm just going to give a small basic understanding on the transfer pricing. So what is the transfer pricing? Yeah. 1 second, 1 second. I couldn't. Oh, yeah. What is in transfer pricing? When a globalization comes, the MNC comes into place. So there is usually a tendency among the global business where they usually shows a higher profit in the countries which has a lower tax rates and a higher minimum profit in the countries which has a higher tax rates. Here comes the transfer pricing. Section 92 of Income Tax Act deals with the transfer pricing. which means any income or expenditure allocation of the cost in relation to an international transaction or a specified domestic transaction should be computed at an arm's length price. So if an transfer pricing results in a reduction of income or an increase in expenditure or loss, will the transfer pricing is applicable? No, in such cases it will not be applicable. What is an international transaction? International transaction means any transaction like sales, purchase, leasing, lending, borrowings, etc. between two or more associate enterprises, and if one such enterprise should be a non-resident. And in case if both the associate enterprises are non-resident, the transfer pricing will applicable only if the income of any of such associate enterprises is taxable in India. So what is an associate enterprising? Section 92A deals with associate enterprises. If an enterprise holds more than 25% of the shares in other enterprises or holds more than 25% of voting power in another enterprises, one enterprise appoints half of its board of director or one or more executive director in another enterprises, or a person appoints half of the board of directors or one or more executive director in and another such enterprises. For example, Mr. X appoints board of directors, half of the board of directors or one or more executive directors in A Limited as well as in B Limited, then A and B will be an associate enterprises. Or if one enterprises lends to an other enterprises which holds more than 51% of the total asset mean a book value of the other enterprises, or one guarantees 10% of total borrowings of other enterprises, or an enterprise business is depend on the other enterprises intangible assets, that's know-how, patent, royalty, etc. Or an enterprises 90% of the raw material is supplied by another enterprises, which and the price and the condition for which is also determined by other enterprises, then it is the both enterprises are called associate enterprises. Or one enterprises sells goods to another enterprises and the price and the condition for which is also determined by such other enterprises. Or one enterprises is controlled by an individual, and such other enterprises also controlled by an individual or a relative of such individual. For example, Mr. X controls A Limited and B Limited is also controlled by Mr. X or relative of Mr. X, then the A and B will be an associate enterprises. If one enterprise is controlled by an HUF and other enterprise is controlled by a HUF or member of a HUF or relative of such HUF, then the both enterprises are called associate enterprises. At last, if one enterprise has at least 10% of interest in another enterprises, which is an partnership firm or an AOP or MBOI, then it is called an associate enterprises. So how will you determine an arm's length price? Section 92C deals with arm's length price, computation of arm's length price. Arm's length price can be computed on comparable uncontrolled price method, resale price method, cost plus method, and profit split method, and the transaction net margin method. So what is a comparable uncontrolled price method? This attracts when there is a comparable, similar, uncontrolled transaction takes place. For example, A Limited is a foreign company which has a subsidiary in B Limited and sells goods at a price of 11 per unit, and it also sells to an C Limited, which is not an associate enterprise, at ₹10. Then the arm's length price will be the price charged to C Limited, that is an ₹10. In resale price method, it usually comes when the goods has been purchased from an associate enterprise and sold to an unrelated person. So the arm's length price is the price charged to an unrelated person's transaction and minus the profit margin in a similar transaction. In cost plus method, it attracts where the goods has been manufactured by one associate enterprises and sold to another associate enterprises, in which the arm's length price will be computed based on the direct tax and indirect tax, direct cost or indirect cost and the profit margin charged for a similar transaction. And fourth one is the profit split method, in which the assessee usually place where the assessee executes its order in a joint venture with its associate enterprises, in which the arm's length price is where the profit earned by the joint venture is apportionated based on the source employed by the such other enterprises, based on the source employed by each enterprises. For example, manpower employed or risk taken by the each enterprises. And at last, the transactional margin, net margin method, where the arm's length price is the profit earned by another player in a similar same industries. So in case if there is more than one ALP, arm's length price, how will you determine then the arm's length price will be the arithmetic mean average of such arm's length price. So section 92C3, where the AO determines the arm's length price. When the AO will determine means where an assessee computed its arm's length price in an inappropriate manner, or the data used for such computation is not reliable, or he fails to furnish the document under section 92D, or he does not maintain document under section 92D, then the AO assessing officer will determine the arm's length price. So how will you report the transfer pricing? Section 92E deals with the reporting, where the assessee has to file a charter accountant report in the form 3C EB, and the due date for which is the 31st of October. And in case if he fails to report, then the penalty will be and 200% of the tax applies to him. And I hope the basic understanding has been given, and thank you, ma'am.
Thank you, Bharti. I think your presentation went very well. Despite having few slides, you actually, I mean, without explaining much in the slides, you try to explain the content on your own. That shows that you have enough knowledge on the topic. I congratulate you for that.
Thank you, ma'am.
Let me summarize it up. The spirit of taxation of international transactions is to determine the income correctly between an SSE and an RI or foreign citizen, or specified domestic transactions, also called as deemed international transactions. You all know that. Why do we have to do that? Because the exchequer of government may suffer loss in case these transactions are not, in case the income of this transaction is not determined correctly. Indian government, the exchequer of Indian government may suffer loss. The provisions relating to determination of income correctly are contained in sections 92 to 90F, as just explained by our friend. Income in the case of international or deemed international transactions shall be determined by arm's length price, ALP. ALP means determination of income by selling price, purchase price, profit margin in the case of two uncomparable transactions. Whatever income you declare in the return, it must not be less than the arm's length price. Suppose the income is less than the arm's length price, then ALP shall be the income taxable. ALP, how do we determine it? It shall be determined as per methods prescribed in the Act, just like Bharti showed us, 6 methods: cup method, profit split method, transaction net margin method. All these methods she just showed us, no? ALP shall be determined in those methods. And when the income arrived by you is greater than the arm's length price, then the arm's length price will not prevail at all. The summary of our friend's presentation is simply this: a very neat presentation, Bharti. I have a small suggestion for you. The next time you speak, go a bit slow and try to depict more in the PowerPoint presentation. Okay? This is a very huge, very wide topic, transfer pricing. You could have covered a few more things. You have covered almost the crust of the major points. You could have covered a few more things like safe harbor rules and all. I know the time limit is very stressful and pressurizing, but all the best for the next session. Okay, all the best for the next seminars. Just go a bit slow, speak a bit slowly. Your knowledge level and performance is very nice. All the best. Thank you. Well, we are done with our presentations by several speakers today. It has been a Great session indeed. My hearty congratulations to all the speakers who have done an excellent job with the detailed and neat presentations. Abhyaas, today's conference's name, it's very aptly chosen. I don't know, probably the credits must go to Shireen ma'am. Very apt name for the session today. Knowledge sharing by the students and for the students. And you guys have already listened from Naresh Gelli sir. There is going to be a Sikasa newsletter and orator forum. Many webinars are going to be organized in the first week of August. I urge you all students to participate because it is useful for knowledge gain and also to improve your communication skills, which is very important. Other than knowledge gain and exhibition of our knowledge, communication is a must in today's world. So these webinars, these conferences will sharpen those communication skills for you, which is a must for everybody in this competitive world today. And students, I urge you all to encourage and appreciate your peers, the speakers, get inspired from them, and participate in more events like this. A great deal of praise must be given to Shrita Shireen ma'am for organizing these kind of webinars, which is very useful for the students. I know that you have a very busy schedule in the office with your toddler son and all the branch activities. Despite all, you are organizing these kind of webinars in a perfectly planned way. Many thanks to you, ma'am. We are also getting opportunities like this to participate. Thank you for this opportunity. Thank you, Team Sikasa. And last but not least, thank you all speakers for making this session a huge success. Thank you for letting me be a participant in this. Thank you, ma'am. Over to you, Team Sikasa. We are done for today's session, and tomorrow's session will also continue. Students, please utilize the most from these webinars. Okay, thank you one and all. Over to you, Sikasa.
Thank you. Thank you, Sahiti ma'am, for keenly observing and analyzing our presentations of our students and explaining where they are lagging and where they are and the points where they are missing. Thank you so much for your valuable sessions and spending the time. And also, I congratulate all the participants for excellent presentations with detailed PPTs. In fact, when we have given the choice to take option to select the subjects, really, I admired the topics you have chosen, which are you are selected only very difficult and very critical topics only, but you have not selected easy one. Really very good. And don't mind that viewers are very less, but really when I understood that when we are uploading the same program in the YouTube, almost 2,000, 3,000, 4,000 views are there, because I understood that the students are making the time when they are free and when they are after office time, they are watching the programs. So don't mind and don't because for a chartered accountant, the presentation skills are very, very important, because having knowledge is important, okay, but how they are explaining the subject to the client is more important for the success of the student, for the success of the chartered accountant. So definitely all will have a bright future. All the very best, and participate in that for the tomorrow's session also. Thank you one and all.